trend number one that Fannie Mae is predicting. Average mortgage rates will decline modestly, but remain above 6% with likely bouts of volatility. You, Greg, Mr. I have 400 rental properties and I manage 6,000 homes around the Jacksonville market and billions of dollars worth of real estate. What do you say about that trend?
I think they know what they're talking about.
Yeah.
I mean, it's interesting. We have talked a lot about interest rates over the course of the last 2 years. And I think as soon as people start to feel like something's going to happen with interest rates, something changes, right? Yeah. And I think, the dialogue really 3-6 months ago was like, listen, the Fed has signaled that they are going to drop the Fed funds rate multiple times over the course of 2024 and 2025. I think it was either 4 or 5 times that they were predicting in 2025 that they would drop it. They've since pulled that back and they have taken a more mitigated approach. And I think they've said that they're expecting a couple of Fed funds rate decreases. But you're starting to feel this all across the spectrum that, you know what? Rates are probably going to go down. I think everybody believes that, which is what Fannie Mae says, but they might not be going down as low as we all might have hoped 3 months ago or 6 months ago, which is good to talk about, okay? So why is that happening? Well, this is why it's so important to pay attention to shows here in our community, as well as the financial reports that maybe you don't really want to pay attention to, like
which you left
CPI, right? Inflation, right? Like the jobs report, like other, really important reports that over the course of history haven't gotten enough love. They haven't gotten enough love.
Not enough love.
But, inflation is higher than we want, and it's sticky. And we've talked about this for a long time. It's going to take time to get inflation down. So when that's happening, they are less likely to decrease rates. Growth for our country is still really high. So it's interesting. We all want growth for our country, but growth for our country makes it unlikely that the Fed is going to drop the Fed's funds rate. And when these things are happening, it makes it less likely when inflation's high and when growth is high, it makes it less likely that investors like us or money managers who are controlling large swaths of money are going to invest in 10-year treasuries. And that's actually what moves the needle for our interest rates. So our interest rates, our 30-year interest rates on our mortgages are more correlated to what is the yield on the 10-year treasury. So you've got all of these macro factors that are going on, and they're leading to keeping the yield on the 10-year treasury elevated. That means there's not enough demand for 10-year treasuries because the yield and the price are inversely related. So long story short, I agree. I think that rates are probably going to be higher than what we were saying 3 to 6 months ago, but let's just talk about it in real terms. Rates are probably still coming down. And as a real estate investor, one of the most tried and true things that we have seen over the course of history is that when rates come down a significant amount, that means that the table is set for increased home price appreciation. So I looked at it. Interest rates right now on 30-year mortgages are about 7% right now. They were down to about 6% in September of this past year in 2024. But right now they've ticked back up to about 7%. What Fannie Mae is predicting is that rates will go down to about 6.1% by the end of 2025. And they're saying an average rate for 2025 will be 6.4%. So long story short, they're still predicting that rates are going to drop. Interest rates, like our 30-year mortgage interest rates, they're still going to drop about a half point to maybe a full point, depending on where you are in the time of the year. And that still represents a great opportunity to buy before likely prices going up. We do expect the Jacksonville market to continue to normalize next year, which means home price appreciation should be here for the Jacksonville real estate market as we go into 2025. So there's still an opportunity to buy before interest rates are going down. And I'll also point out one other thing. JWB has been offering incentives to buy down interest rates. And many times the question was like, well, JWB, does it make sense to take the buy down incentive? Our interest rates our clients are closing at about 5.5% for their mortgages, which is lower than what you're finding out there. Part of that is because of the incentive that JWB has been offering to buy down the interest rates for our clients. So as the narrative has come more about interest rates maybe not going down as much as we all wanted, the value of those incentives and the value of that 5.5% interest rate, let's say, that you could lock up today is even more, because it's less likely that you're going to refinance that in a year or even 2 years.
Yeah.
So it's a great time to take advantage of those incentives, because it's likely, let's say if you get to close at 5.5%, that's likely the best rate on an interest rate that you'll be seeing for some time now.
Yeah. All right. So takeaway is you agree with this trend. We still see long-term interest rates. They will be going down. And even though they're not going down as much as we thought that we were, they're still going down a bit, right? Which means that we see home price appreciation happening, because that's what tends to happen. And the opportunity right now in this kind of environment is that if you're thinking about investing, buying down the interest rate is even more attractive right now, because you get to lock in tomorrow's rates today, and tomorrow's going to be a little bit further away also, so that you are locking in that appreciation and that rate and the cash flow at the same time.
Yeah.
Okay.
And absolutely. And then the other thing to add is, guys, we should be tuning in and talking about interest rates a lot, because you know what? It might change next month. The outlook, what the Fed says, what the wonderful financial reports that we looked at say, inflation, jobs, wage growth, everything, it might change. It might be a new story next month. Yeah. That's just the world we live in right now.
Volatility is what they're saying around the interest rate, right? It might happen. All right, cool.